Hey, how's it going, guys? So let's go ahead and take a look at today's price action. So today is Friday. I'm really excited to show you to do a recap with you guys because today's price action was pretty interesting. So let's go ahead and take a look at it. So this is Thursday's candle, okay? So this is Thursday's low and this is Thursday's high. So since we took out Thursday's high, we're going to be looking for mostly buys today. Mostly buys. That's what we're going to be looking for. Okay. Oh, I'm sorry. Uh, Thursday's low. There we go. Okay, so this is what we have for Thursday's high and Thursday's low. So we have this and we have this. Okay, just by what you can see, you can tell the price action has been bullish or has been going towards the upside. Let's go to the 1 hour again. You can see pretty much the same thing. So you can see, what's it called? You can see this higher low, higher low, higher low, higher low over here. So you can clearly see the price action is you can clearly see the price action is bullish. All we can see, so we can expect the market to keep going up. So that's what we're looking at for. Okay. Now, if you look at the 30 minutes, then you start to see more underwriting as the day goes on. Honestly, you get to start seeing order blocks that hold. See order blocks that hold, and order blocks that hold. So you get to see all the order blocks they started to hold. I mean, those are good opportunities for buys. So if you are like a long swing trader and stuff, you can take trades like that and hold them for a long period of time. But so far, that's what we are seeing on the chart. But let's go deep into the because I like personally like to trade on the 2 minute because then I get to see all the price actions and everything exactly there. You can see how it becomes more clear. Order block here, order block here. This one goes up, came back, pushed up. Order block here, order block here. I mean, you can see the markets are holding the order block structures. Okay. And for the trend line traders, me, I don't discriminate on how you trade. I think trading is technical analysis is easy. It's easy. The hard part about trading is risk management and finding an edge. So as you can see for our trend line traders, three touches, is a strong trend. So there you go for our trend line traders. We have something for you as well. Okay, so let's go to the 2 minute. There we go. So this is everything that happened in today's price. So this is going to be from 8:30 to 3 p.m. So this is today's price action. Okay, let's go ahead and look into it. So first of all, we had this huge bullish move to the upside. We had this huge bullish move to the upside. We can call this. Let's go to the 5 minute. Okay, so we had this bullish move to the upside. So we can call this, our breaker structure. Our breaker structure to the upside. So as long as the market doesn't take out, and of course this is forecast because the move has already happened. But I mean, this is pretty much what I was thinking at the time. So the breaker structure to the upside, so we can expect the market to come back to this order block over here. Or if it doesn't come back to the full order block, we can expect a 50% retracement. As you can see, the market just pushed right down to a 50% retracement. So that is something to keep in mind. So breaker structure over there, and let's go back to the 2 minute. So 8:30 happened. 8:30 started right here. Okay, so breaker structure, which turned out to be a grab of liquidity to push down to the downside, and we had this breaker structure here. So this is before the 8:30 market opens. So this is kind of like when you're doing your early morning analysis before the market opens. So you're looking to take a trade. So I drew out my order block as you can see here. Let's go ahead and use this one. My order block right here. I had a sell limit entry over there. My entry was going to be right here. Stop loss was going to be, you know, over here. And I was actually going to, because as you can see, when the market opened and pushed down and started retest, so I was actually going to target this low. And I was going to take one contract off and just let the rest keep running. I was going to keep drilling because as you can see, the market did melt down, but I didn't get tapped in. So the only thing I was pretty much possible to do was, go in here with the scalping method that we have. So, I mean, so we had this candle broke the upside over here. So this is going to be down, down, up, up, down, 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 down. Okay. So the best entry would have been, so after this up candles we had, this is a down candle. So this one took out the low of that candle over here. And this candle over here, this one didn't take out the high or the low. So this candle is going to become what this candle was. So our entry would pretty much would have been at this candle and stop loss at the high over here, 64 ticks. And what we do best, and we just keep trailing, keep trailing. So we probably would have got taken out. We probably would have been taken out right. Let me see. Right here. Because this turned out to be a, down, down, down. This one didn't take out the high or the low, so it's going to become a down bar. This one didn't take out the high or low, so this is a down bar as well. So down, 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 and down, and this candle takes out the high. So that's what we would have been looking at. So let's go ahead and do the math. So if, let's say if you did a proper risk to reward trade, so if you only one contract on this and you captured all the move you'd have made, what's it called, 2,800 on this trade. That's how much you would have made. So, like I said, it all comes down to proper risk management. Okay, so that was one of the trades that happened. Then after that happened, we also still have this. Let me see, which was the biggest order block. Yeah, so we have this order block over here that was never tested. That was never tested. Now over here, we have this breaker structure to the downside, and we have this order block. Yeah, so we have this order block over here. As you can see, the market comes out, grabs the order block. So this would have been a bad trade. So you probably would have lost this trade if you take an order block trade over here. You would have lost that one, but it's completely fine. It happens. So then this becomes a breakup structure to the upside. So something like this, because we didn't get a close, we didn't get a candle close over here. You would pretty much be skeptical. You wouldn't want to just go ahead and enter on the order block. You'd be waiting to see some kind of reaction, which is exactly what I did on this trade actually. So it'd be order block is going to be right there, and as long as we don't break this low, we should be fine. Low needs to hold, and the low did hold. So as you can see, the market starts to start pushing back up over here. I guess a lot of buyers stepped in, probably I would say right here inside in this whole market. A lot of buyers stepped in right here. So you get in. So we are looking at down, up. So yep, you get in right here on this candle, stop loss underneath the low, or right there to be fine. Your target, you're getting a 1 to 2 risk reward on this trade. So if you risk one contract, you're risking $710 to make 1,400, which isn't bad. Like I said, 1 to 2 risk to reward. So regardless, overall, you're always gonna be profitable. Because you don't need a high win rate if you have a 1 to 2 risk to reward. So that's one of the good things about, like I said, it all comes down to risk. I mean, you can look at the chart all you want, however you like to. If you look at, as long as you look at the chart, you're always going to see almost the same pattern. Now, the hard part about trading is just risk to reward and risk. I mean, that's pretty much what it comes down to, managing risk. Because if you manage your risk long term, you're going to be profitable. So that's one of the good things about it. So, and this is what happened over here. I mean, so the rest of these trades are just pretty much order block trades. I mean, look at this beauty over here. Okay, this is a beautiful trade. Let's say you get in right there, put stop loss underneath this low, which is what I would, because it makes it stress free. You don't, like I said, you don't want to worry about, okay, this has been too many confirmations. All you're looking for is a break of structure, retest, and that's how, for me, that's the easiest for me, if I'm being honest with you. So you can target this first buy side over here, or you can target this whole move over here. So this first buy side over here would have been, okay, buy side. Okay, so we have this first buy side over here. So we got in right there on this order block, stop loss underneath the low, right? So let's go. If you look at create limit, so we're risking $625 to make 2,240 dollars. Like say, it all comes down to risk to reward. Beautiful trade that happened today as well. And okay, so breaker structure happened right here. Okay, so now something you have to be careful about is, so the market did trick some people in over here, because let me see actually if this is right. So we're looking at a, okay, there we go. Yeah, so you won't necessarily have to worry about that, because the 50% move was right here. So if the market doesn't come back to order block, you at least want to always get a 50% retracement. Anything below before it gets the 50% retracement, that might be a fake out. So you don't have to worry about that. So you don't want to take anything less than 50% retracement. So for example, this move that happened right here, for example, so this one right here took out this high. So, like I said, always something like this. If there's no closing on the week, you want to come down and see if the market is going to hold this. But in this case, the market doesn't hold; it just pushes down. So, like I said, this is the 50% retracement because the market just keeps dumping. So, 50% retracement. What are we going to go ahead and do? We're going to take this big black candle, pause. That's kind of sus. I had to say the pause in there. So, something like this, because of how big this area is, your 50% entry over there, stop loss underneath here, and you want to go ahead and target the first buy side. Okay, so the first buy side. Let's go ahead and look at risk. Look at that. So we're risking $265 to make 1,500. Now I don't mind. I can go two contracts because I don't mind risking $500 on this trade. So now we're risking 530 to make $3,000. That's what we call risk, proper risk management. So this is a beautiful trade as well. As you guys can notice, all the blocks from 9 a.m. they started to respect each other and start playing around, because 8:30 you just see that huge gush to the downside, or a huge gush that usually happens, and you start to see the order block trades. And I mean, that is pretty much everything that happened. And let's take this out. Then we have this what's it called, breaker structure to the upside towards the market closing session. So there was not really, okay. Okay, break of structure, buy side was grabbed over there. Now, what you can go ahead and start doing is, you want to go ahead and start drawing your order blocks out just in case the market gives you that. Or if it doesn't give you that, it's completely fine as well. I mean, it's always too much. It's almost towards the end of the day, so you don't have to start worrying too much about looking for trades. So let's see if we get a 50% retracement here. Okay, okay. So we don't get a 50% retracement, so you'd be skeptical about this trade. Okay. The market did come back to retest this and push, but that, like I say, it's not a strong setup, so that'll be risky. But I mean, look at this, is all the move that this is all the price actions that happened today in today's market. Honestly, something I didn't explain was this one over here as well. So after the market, tapped it just by a little bit, the market came back down to play around. Fake out trap. Okay, so the market came back to play around. EOS. So what do we say? So usually, if we get a break of structure that happens right here, if we get a break of structure with no candle closing above this, we want to come back and see if the order block here is going to hold. So what do we see over here? So this move back, this is what pushed to the upside. So now we can go ahead and draw this over here. Okay. So what happened? So the market came back in here. As you can see, we have down bar, down bar, up bar. Great. So you go ahead and put your entry right here. Stop loss underneath this low. And if you for those of you if you know if you want to be safe, you can always trail your candle by every bullish candles. But you go ahead and target same high again. Okay, target the same high again, and as long as the market keep pushing, you can go ahead and target this overall high. So I mean, this would have been a beautiful trade as well. So create limit. So yep, 465 to make 1,091, which is not a bad trade. So as you guys can see, there was a lot of opportunities in today's market. So I hope you guys like and enjoy. Please subscribe. It helps the channel out. If you guys have any question, leave some comments below. And like I said, guys, trading is shouldn't be the hard part. The only hard thing about trading should be emotional hijack and risk management. If you can control your emotions and proper risk management, you are going to make money. Well, thank you guys so much. Bye.